Welcome back. Intel could be in for a rough trading day after lowering its third quarter forecast because of sluggish PC and flash memory chip sales. Here's what happened. Intel slashed its revenue estimates to between $8.3 and $8.6 billion. In mid-July, Intel had forecast sales of $8.6 to $9.2 billion. Intel also cut its gross profit margin target to 58% from 60%, did not give any precise earnings guidance for the quarter. Investors definitely showed their displeasure in Intel sending down the shares nearly 7%, and after hours are at $1.45 to $19.98. It's down about 6% in Europe right now. For his outlook on the company, we're joined by Apjit Walia, analyst with RBC Capital Markets. Good morning, Mr. Walia.
Thanks.
Well, you were one of the few who really flagged this weeks ago. What in the report was the most surprising aspect to you, or is this basically what you thought would happen?
Well, we expected margins to come down and, of course, end demand to slow down. I think the fact that they came in and did it so soon in the mid-quarter update could be a bit of surprise to people. And I think the worst news here itself is their margins going down for the quarter and for the year. Intel stock trades on margins, and for them to revise that down further is definitely what investors are being negative about.
So they're promising 58%. Can they even deliver that if they get just a slight bit more of bad news?
It's hard right now to say what they could do, and we have to see September play out. The month of September is 45% of the quarter, so we have some time to go. So
why didn't they give earnings guidance?
Oh, they don't. Intel
Intel
doesn't do that anyway.
Okay.
They just give top line.
What
and
do
gross
you
margins.
expect?
We've got 28 cents model in for the quarter now, and for 05 we've got $1.10, which is way below I think the street could be. I believe as the cycle has peaked and we will see accelerating growth in semiconductors in 05, Intel's margins are going to get lower and lower. That's a typical cyclical relationship.
Could you look at Intel as a good company going through a bad time and say, all right, boy, it took such a hammering. It's way down below its 52-week high. I mean, is this a buying opportunity?
No, I don't believe at this point. It's a great company, of course. It's going through a cyclical downturn, which the whole semiconductor sector is suffering from right now. As there's a lot of capacity and there's a weakening end demand globally, especially in China and India. But I think the problem with Intel beyond that is a structural problem where long-term their PC exposure, the 80% PC exposure, is really going to hurt their margins, the structural margin band in the next 5 to 10 years. And they have to address that by going out there and buying companies which have consumer communication exposure and do it soon.
You know, you mentioned China and India. One of the things that surprised me was how they're losing share in those places. Is that something they're going to have to address very soon? Because we never thought of Intel losing as much market share as it seems to be that they're losing now.
Very much so. That's exactly where this commoditization is happening. AMD is catching up. You're seeing a lot of low-end PCs like Legend Lenovo being sold in China and India as well, where pricing power is much more limited. And the competition from AMD is much more severe there, also in the flash business. And now Intel's seeing that their premium brand is not that relevant as it has been in the West in the last 20 years, as it should be in Asia, and that's why the competition is getting worse.
Well, the analysts are making their calls. We're just hearing that First Albany is cutting the price target to 24 from 30, but still maintains a buy. What are you calling for?
Well, we've been negative on the semiconductor sector for almost 8 months. We went negative in January. And we have a sector perform in Intel. Essentially, we believe the sector itself is going to come down further, and Intel's not going to underperform the sector itself. Okay. But of course, we believe stock should come under pressure.
Do you own the stock at all?
No, I don't.
No positions at all?
No.
Apjit, come back again. We appreciate it.
Thank you.
Apjit Walia is analyst with RBC Capital Markets.